Hello, I'm Troy Sainsbury, a mortgage planner in Madison, Wisconsin. When considering purchasing or refinancing a home, the first decision is often who to work with for financing. So we'll discuss the differences between working with a traditional loan officer and working with a professional mortgage planner. The fundamental difference between a traditional loan officer and a mortgage planner is in their objectives. Will the person you're working with just be working to get the loan done? They can do this by establishing your maximum purchase price and loan amount, giving you the cookie cutter loan they offer everyone else, and working in their bank's best interest. Well, a mortgage planner is working to do much more than just get the loan done. A mortgage planner will help you use your mortgage to grow and protect your wealth. They determine a loan amount and monthly payment that is suitable for your budget and is always working in your best interest to make sure your mortgage is part of your overall financial plan. They take into account income taxes, other investments, and family and other future changes. A mortgage planner does this because they recognize that a mortgage is not one size fits all. Keeping in mind the different approach and objectives of a traditional loan officer and that of a professional mortgage planner, when you have a question about your mortgage, would you rather call and wait in a phone queue just to get generic rate and closing cost quotes that are not specific to you? Or would you rather have a personal advisor that serves as your contact for advice on your mortgage and the financial markets? Being a mortgage planner as your personal advisor throughout the loan process involves much more than just providing a good faith estimate and maybe a pre-qualification letter. You'll get the estimate and letter from every loan officer. But the mortgage planner will also advise the best time to lock your interest rate based on the market and be involved in the mortgage process to personally coordinate a smooth closing. They will also show the impact of owning versus renting, analyze different loan options to find the best one for you, and determine the most efficient debt structure for your specific situation. In providing clients with a written mortgage plan, a mortgage planner will compare options like these side by side. As you can see, there are several options and many variables. And that's why a great rate on the wrong mortgage can end up costing thousands of dollars in the long run. In this analysis, the client is considering putting 10, 5, or 3.5% down. For their individual situation, after 10 years, they end up over $10,000 ahead from seeing which option is best. Now, some folks believe that they should shop around for their mortgage. But first, it's important to remember there are different types of mortgage loans. There are FHA, VA, and rural development loans through the government, conventional loans through Fannie Mae and Freddie Mac. Local banks have their own portfolio loans that only they offer. But as with all mortgages, rates and closing costs change continually. So one problem with shopping around among different lenders is we end up chasing a moving target. Worse, would you have the lowest bidder handle the largest transaction of your life? If you'd answer yes, I'd remind you that a small detail in your mortgage can have a huge impact on other areas. And because rates and closing costs are continually changing, a professional mortgage planner should have access to real-time mortgage bond information. With this, they can see short and long-term trends and how you'll be affected. And while the approach of a traditional loan officer is to just get the loan done, the mortgage planner's job is to incorporate your mortgage into your overall financial plan. That's why you must consider what type of relationship you're looking for. After your loan closes, do you expect periodic follow-up from a loan officer other than credit card offers from their bank and the typical advertisements to move your bank accounts with them? Because on the other hand, a mortgage planner is committed to ongoing management through regular updates, financial tips about credit scores and taxes, and most importantly, constant communication with clients to alert them of opportunities and plan for future changes. So the decision is yours. You can talk to traditional loan officers and compare quotes during this changing environment, or you can work with a professional mortgage planner that will help you determine the best loan for you and make sure you always have the best loan in the future. When you have questions, Want to work with a professional mortgage planner who cares about your specific needs? You can call me at 608-273-1100, email me tj@waterstonemortgage.com, or feel free to visit my website www.madisonmortgage.org.